I think we have some good number of people here. We can start, shall we?
Yeah, got yeah.
Okay. This session is going to be a conversation session rather than me speaking more. I want to know you guys to speak more on this as well. Let's have it as a conversation to have a better understanding about private equity. Okay. And I'm Kalimutu. I've joined Apex from 2018, and I've been working in AFIN side of private equity currently, which is hybrid model. Okay. I was part of Singapore team initially, and I moved out to AFIN side. Okay. So the first question to the group here, right? Uh, how many of you know about mutual funds? How does it work? Anyone from this group can answer this. Is the silence is what does it matter here?
Mutual funds, in the sense an underlying asset is created and units for that underlying assets is generated and that units get sold.
Perfect. See, that is the second part of this. I want the first. How do they get the investor? How do they start a mutual fund? Starting of a mutual fund happens. Yes, Narayana, go ahead.
Yeah, Kali, this is
Manjunath.
Manjunath here. Actually, the mutual fund firms, they will collect pool money from the investors and they will invest in the target investments in the interest of getting return or profit.
Okay. Anyone else wants to add something here?
And you know, Kali, like she said, like rightly pointed out, the investments made by a couple of investors is by retail or else corporate, as both liquid and non-liquid funds, where we are doing the controls on daily basis, based on which NAV is calculated by the fund accountant who is liaised with the respective AMC. So the fund managers who is liaised with the respective AMC will do the NAV calculations based on the controls and the postings done from RTA 8, and then the respective fund managers will be placing all the playing the funds with respective investments from his end.
Okay. I have all the expertise over here. Okay. Very advanced. Okay. Good. Okay. The similar way, private equity. Okay. Mutual fund and private equity are more or less the same. Okay. There is no much difference between a mutual fund and a private equity. Also, the hedge fund over here. Okay. We are from different backgrounds, or a few are from private equity. I understand that. Okay. Let's go into private equity. Private equity. What do you mean by private?
Generally, where the funds are not listed,
Okay.
where the objective is not to get the funds listed. The originator have an idea on one sort of investment and they want to take advantage of that, and the motive is to get the idea fulfilled and sell the underlying asset at a profit and come out of the investment.
Okay, so you are talking about private equity altogether. My point is, what is private?
Private means not
Private.
access to everyone. Means
Yes. Okay. So equity. What do you mean by equity?
equity means shareholders fund.
It's a share, right? Equity is nothing but a share. Okay. So investing in private share is private equity. A private investments. Yes, Aurora. I'm an Aurora. Yeah, you can go ahead. Suppose you were telling me something, right?
Nothing. Just was telling the ownership.
Yes, the ownership. Yes, right. So this is private equity is nothing but investing in a private concern. Okay. In simple terms, if you want me to explain, okay, what are the things which is there in a private investment? What all can be done? Who can invest in a private company? Anyone can invest, right? Guys, I again tell you, it is going to be a conversation session rather than me speaking more. Sorry, yeah. Participation is important.
Yeah, Kali. Actually,
Yes,
if it
anyone
is
can.
a company, anyone can invest. If it is privately invested, only the selected investor can invest.
Provide agreement, provide entire that first, who gave the word in the first.
Perfect. Agreement is in lies. Yes, right. Agreed. Yes, I.
Yes, sir. First of all, when they start an activity, they will enter into an agreement. This is the committed fund, and these people will be agreed for that committed fund, and they will invest that. They will be giving assurance for that committed fund, and the agreement will start. And no other people. Once the agreement was closed date will be there. Once it was closed, no other private persons will be allowed for that private.
Okay, correct. Yes, Vivek. I can see only few guys over here in the screen. Okay, so whoever wants to speak, please go ahead.
Yeah, as these are private investments, so there will be some eligible criteria. So, who met those eligibility criteria, those only are able to invest in these funds.
Okay, that is into private equity funds. Yes, right. I agree. Yep. Okay, any other points to add?
Accredited investors and high net worth individuals can invest in private equity.
Okay, right. Okay. So in mutual funds, everyone can invest, right? Even you, me, and everyone can invest, right? So this is one of the difference.
Yes, sir. Yes.
Okay, because let's compare this with mutual funds to make it more easier for us. So high net worth individual can only invest in private equity, but in mutual funds, anyone can invest. Okay, and what else? Any other points to add?
Mutual funds you can sell at any point of time to anyone, but in private equity you can't.
Perfect, perfect. Vivek, right? Sorry, I
It's a
missed that.
closed-ended
Yes,
fund,
sir.
right?
Yes, sir.
Okay, it's a closed-end. What do you mean by closed-ended fund?
Up to certain period, we cannot able
You
to come
you
out of
cannot
the fund.
invest. You cannot invest after the locked-in period.
Lock-in period. You cannot invest after the lock-in period, right?
And
Yes.
also, if you want to come out of fund, we can't come out of fund after a certain period, either maybe 10 to 15 years.
Okay. See, Narayana Rao, there is a slight change in your statement. Okay, we can invest after the lock-in period also. Okay, but new investor can't come in.
Yeah.
Only investors who are there at the starting point of time, they only can invest.
Yes, right. That is the only correction to your point. Okay, other things are correct. Yes.
Yeah.
Any other
Thanks.
point? Any other points?
Mutual funds are more organized compared to private equity funds, and there are a lot of additional legal requirement. I hope so.
Perfect. In mutual funds, it has been handled by SEBI here in India, but for private equity funds, we don't have a regulator, but we do have it. Or to that state. Okay, it is not owned by government body. Yes, Satish. Okay. Any other points?
Kali, as it mentioned earlier, the funds, whatever private equity are invested, mostly or kind of 99%, it is not listed investments, all are private investment. And if you see, it will be investment will be in big in size and also high risk.
Correct. Yes. Agreed.
More thing is in mutual funds there is nothing like fixed interest and all, but on private equity, based on the agreement, we have to pay a fixed amount of interest to some of the partners.
Correct.
Also adding to these, the another basic difference is private equity. They are not readily marketable or liquid in nature, where mutual fund is.
Correct. Yes, they are illiquid in nature, private equity. Agreed. Okay. Any other points? We have a lot
Mutual
of points
funds
to
are
discuss.
low
Yep.
risk. Mutual funds are low risk compared to the private equity.
Correct. Low risk, low return, high risk, high return, right? Agreed.
Right. Right.
Yep. Any other points?
Oh, hello.
Yes. It
Oh
is
yeah,
mentioned your name.
mutual funds actually. Oh, just continue.
Satish. Yeah, Satish, go ahead, Satish.
Yeah, actually, in mutual funds, partners can't decide to simply they can't opt in, opt out any investment. But in private equity, they can.
Perfect. Yeah, opting out option is there in private equity. Yes, Prakash, you were telling
Yeah,
something. Yeah,
actually,
go ahead.
I was just to say that in mutual funds we have various options, like we can invest in debt portfolio, equity portfolio, or mixed portfolio, anything. But in private equity we don't have that option actually. I mean, we cannot go for a mixed one.
Right, right. Okay. But we have some specific set of funds here. Yes, correct. I agree with you. Any other points? I think you're making my work more easier. Huh? I almost have 25 people here. Only I can see 8 to 10 people speaking. Anyone want to add any more point?
Hi, Kylie Keshav here. So mutual
Hi,
funds,
Keshav.
basically, since it's regulated, it's basically invest in the primary market investments, but private equity will go for raising capitals for new projects, deals, what do you call joint ventures and stuff. So that option
Joint,
is there in private equity.
yes, venture capital, joint venture. Yes, right. Okay, so we have covered most of our points about private equity, guys. Okay, we are almost clear. You know, we are almost 50%, more than 50%. We have taken the points of private equity, which we have discussed. Okay, let me tell you what is a private equity. As you all told me, it's a private investment made in a private organization. This private equity was investing only in private investment, might be a decade back. Now you can see private investment making investment in public sector also. Okay, they have the option of buy in, buy out, and what they do, they invest in a private concern as well, you know, and they majorly concentrate on venture capital. And what is their motive is profit. Okay. And their investment will be for a longer tenure, minimum of 5 to 10 years. Because that is the reason it is illiquid, because they go for a startup company where they will go help them fund in a huge capital, as we discussed, and they will make that to be a big business. And for example, might be 5 to 10 years back, 5 years back, right? Ola and Uber were invested by private equity concern, if you are aware. Now they are into a very big organization altogether. So now they are having an exit strategy. When they are going to invest into an investment, they always have an exit strategy in place. They will say 10x is my profit of my investment. I exit. So that is the major play they do it. Okay. However, for a venture capital, bank loans or any other things is a little challenging one, because they need security and other stuff. So private equity investor will give it to you if they like your ideas. That is the major point which we need to take into consideration. And who can be the investor into this fund? It can be high net worth individual, retirement funds, or an institutional investor. Okay, so not everyone can invest, and you and me cannot go and invest in a private equity. However, if you join a group together, like a pension fund or a retirement fund altogether, right, we will have a huge amount where we can invest. Okay, and you will get a very good return in the private equity fund, but the risk is also high. But in mutual funds, it is not there. Okay, and guys, are you able to see my screen?
Yes.
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 Yes, sir.
So
Yes,
this all we
yes.
have discussed. Okay. So for example, private equity consists of investor fund that makes investment directly into private companies, buyouts of public companies as well. Okay, we discussed characteristics. It's not public, long-term investment, big in size, huge amount has been invested. They take the major stock in the company, illiquid, high risk. So which we all discussed till now. And it's a direct investment and indirect investment. So what are the direct investment and indirect investments? Anyone? So let's not read this, huh? Hello? Hello? Guys, are you able to hear me?
Yes, yes, we are able to.
Okay.
Yes.
Don't be too silent here. I feel I know I'm speaking to myself. Huh? Yeah. What do you mean by direct investment? Anyone?
Investing
Is that your
directly,
breakfast?
sir, investing directly into the in the equities of the other company. It is called
In
the
the
direct
equities of other company. Okay, cool. Okay, indirect investments.
and indirect investment means it can be done through SPVs that we will create some funds and making indirect investment through to the company.
Okay, cool. Correct. In simple terms, I'll put it. Okay, to understand. Me investing directly in share market is my direct investment. Correct. I'm going and investing, buying a share of TCS or a CTS, Cognizant, or Wipro. It's my direct investment. I read it to someone like a broker. You buy it here, you buy it here, or you trade on behalf of me. It's an indirect investment. I have money, but I don't have a market exposure. So I route it to my friend or to some other broker institute or a financial institute to trade my money. So this is the indirect investment, right?
Yes.
So that is what is happening over here as well. Next, are we clear? Any clarification on this first point, guys? On private equity, I think.
No, Kali, you can go ahead.
Okay, everyone fine, right?
Yes,
Is
Kali.
that your breakfast?
Yes. Very well.
Okay. I can hear one or two voices now. Breakfast.
Yes,
Others?
yes.
Okay. Eating, you should do it fast here. Come on. Training is the secondary thing. Huh? At least for food you can speak. Huh? Now I need to ask, what did you have in the for your breakfast? Okay. Next.
So,
yes.
in private equity, what exactly equity means? Can you clarify about that?
See, equity is nothing but shares. Okay, like you have preferred shares or preference shares or convertible preference share or equity. Equity is your ownership right on this particular fund, right? When you're starting up a venture capital, okay, for example, if you want to start up a organization, you need money. Okay, so what you do there is you take 100% of your capital. Okay, how much I'm going to invest and how much the other person is going to invest, for example. Okay, so based on the capital, you're going to divide the share, the equal rights given to each other. Equal rights is based on your contribution towards that investment or into your company. So if your company needs 100 rupees, right, for an starting up an organization, someone pays you 75, someone gives you 20, you pay 5. So what is the ratio you're going to keep it? Equity, 75% ownership will be with the person who paid you 75. 20 will be the ownership of the person who paid that. The share, if there is going to be a return of 100 after 5 years, you need to share that with the same ratio. Correct?
Yeah.
That is the equity over here. It is nothing but your ownership rights.
Okay.
Got it?
Yeah.
Okay. Any other question, guys? Vivek, you want to say something?
No, sir.
Okay. No, sir, mean I'm Kali. You can call me Kali. Okay. No, sir, here, please. Okay. As we discussed again, on a private equity fund, pool of money, multiple individuals. Yes, right. So I remember that someone was telling it's a huge capital going to be invested. Can a huge capital be brought by one individual? Definitely not possible until it is going to be Ambani or Adani groups in India, especially. Okay. Or for a specific objective. What do you mean by specific objective here? Specific objective is profit motive. They are not going to be a service motive people for sure. Private equity investors might be 1%. Am I right? Any other option? Are there any other suggestions here or any other points to add here? Yes,
Kali, you are correct.
Yeah, Kali. Nowadays, there are specific objectives coming in. For example, green energy, environment preservation, like partly business. They are trying to do something in private equity as well as mutual funds.
Okay. Profit motive, expert advice. They have an expert group to advise where to invest and when to invest as well. Okay. And private equity funds, limited partnership in US, closed-ended fixed life. So limited partnership is nothing but LP, the limited partner, who are going to be the investor in the fund. So limited partner is no one except whoever is going to invest. The investor are called the limited partnership. Like our company's law in India, right? We have this investor and the company where your liability is limited. So when we are going to start up a company, right, the limited partner, that is nothing but the investor, will commit in some amount. For example, uh, let's take the example of a company law, company accounts here. Sorry, it's not company law, company accounts, right? Where you will buy some primary shares of 10,000 shares at the price of 10. Okay, so your value is going to be 1 lakh. Your commitment to that company on the share is 1 lakh. So your commitment is 1 lakh. But will you pay all the commitment at one go? Will you pay all the money of your 10 rupees at one go? Company accounts. Anyone?
Based on the calls made.
Perfect. Yes, right. Any other points?
Based on the contribution, they will be asking.
Perfect. So yes. Anyone? Yeah, go ahead. Okay, fine. There is in a company account, there is an authorized capital and a subscribed capital, right?
Yes.
Yes.
What is an authorized capital?
Authorized capital is the maximum amount of capital that goes into the fund. 100% of the
maximum amount that can be borrowed from the public.
called
Capital can be raised.
What is the subscribed capital?
The amount of capital which is
called in
already
capital.
Called in capital. Perfect. Okay.
Go ahead.
Yes, Vivek. You have a point, right?
No, sir. They have given the correct answer. So
okay, fine. Thanks for that. Okay, similar to that. Okay, like authorized capital. Okay, the total of all the funds of LP and a GP. GP is general partner who is going to be the fund manager, or may not be a fund manager as well. Okay. So this is called your authorized capital in private equity fund is called fund total commitment. Fund total commitment. To the maximum their fund can raise its commitment. Commitment is nothing but your capital. Okay. This includes the collation of all the limited partners, that all the investor plus your general partner. General partner is can be your fund manager or may not be a fund manager. Okay. But he is the person who is going to take care of your investment activity altogether. Okay, and the subscribed capital is capital called for that particular time. That is called as funded commitment. You can say that as a funded commitment. Funded commitment is nothing but the capital called till date, or your share numbers which has been called till date. Okay, so it will be like this. If your total commitment is 100 and you are paid in 10 rupees till date, and your remaining commitment, that is your unfunded commitment, is going to be 90. So you need to pay 90 rupees back to the company, private equity organization, like our company accounts. The same logic applies in this fund as well, private equity. Got it? There's any clarification? Pin drop silence. Very good. Huh?
No, sir, we got it, sir.
Yeah.
We got it.
Okay. So the next part is private equity fund of fund. What do you mean by fund of fund? We haven't came across the situation earlier, right?
sir, it is an indirect ways of investing where one fund is actually investing in another fund, and another fund is invested in is actually making the investment in the market or not.
Actually making the investment in market or not. Okay, good. Any other points?
For risk diversification, we do like that. We create more
correct. Okay, correct. Any other points to add here?
Investing into other private equities.
Okay. Investing into other private equities, correct. Any other points?
Not need to manage separately for managers.
So come again. I didn't. Sorry, it was not clear to me. Not. Satish, please.
The managers not need to be manage the portfolio separately.
Okay, so just relax.
Take advantage of geographical locations actually. a fund is set up in US and it goes and uh, invest in another fund which may not be in that country, that way, in different
Okay.
countries.
Okay. Perfect. Perfect. Yes, right. See, one fund investing in other fund. That is fund of fund. Okay. It can be a primary fund or a secondary fund. Okay. Primary fund and secondary fund. No, we know, right? Primary market and secondary market in the stock here, right? Primary market, when the shares listed is an IPO listed, then when we go and buy it, it is a primary shares. If you buy it in the open market, where in the share market from some other person or some other organization, it is a secondary market. Correct? So same logic applies over here, because in a private equity fund, right, you cannot give back your shares. You cannot surrender or redeem your shares to the same organization. Either you need to see a public person, public investor who's ready to buy that investment from you, a private investor for that matter. So for example, if I buy a shares in TCS, I can go and give it back to TCS altogether. I can buy it. I can see a person who wants to buy the share in the open market and I can give it to that. So that is going to be the secondary market in private equity as well. Okay. And diversification. Okay. They get a huge number, like 50 million or 100 million, whatever it is. They will not go into an investment in one set of investment, right? Even for for our ULIPs, okay, where we have invested. Guys, are you able to hear me?
Yes, yes.
Yes,
Yeah.
Yes.
Yeah.
okay, fine. Okay. Where we have ULIPs, right? Where they will diversify your investment. So for they will say 40% will be on your like investment like equity, where you get a fixed return. 40 to 60% will be in that ratio, and 40 to 60% will vary from your high risk investments. That is how they invest it, right? They diversify your investments. Correct?
Yes.
So that is what is going to happen in private equity also. They will not go into one set of geography or one set of investment sector wise, for example. They will diversify or your investment. Okay. They will take at least 2 to 3 years or 2 to 5 years to invest all your money into the market, because they will monitor the market. They will closely watch what is going to happen in the next future, and then they invest into the market. That's the reason you have an advisor groups who are sitting there to analyze the market and give you the benefit. For example, I told you earlier as well, Ola and Uber. No one would have imagined a success to this level in India, especially, right? But now everyone wants to take, they doesn't want to take their own car. They want to just type in book an Ola and just travel and come back. That is what their success is all about. And how do they get into the market? Any idea? Yes. See, before Ola and Uber, we had this travels, right? And we also had call taxis and other things. But outcome, Ola and Uber were successful then. Have you ever thought about it?
Sir, it will cover the masses. Actually, everyone cannot afford to buy a car. So and so that is why the main reason was to it become successful.
Yes, right. Any other points?
We can go anywhere as time. If you have a time constraint, we can go on time if you book a cab like that. On time.
Yes, we before we also had auto, rickshaw, and other things, right? But how come now we are preferring only Ola? What made us to do that?
They
Today
just
we are
take advantage of the demerits of other services. Mostly they will do a lot of research on that before entering into any investment. So the research part is also important. So
okay. Okay. Any other points? Research points is agreed.
Actually, Kali, it is easy accessible. It is because it is in our phone itself. So wherever I can book it. Or else if it is auto or taxi, I need to go to them, and it's create monopoly within them. Whatever they charge, we need to pay it. Here in Ola, it is transparency for the customer. So they can trust. They can trust the company.
Fine. Yes. Any other points to add here, guys?
An important thing, the metro cities we don't get parking.
Yeah, that is the biggest challenge. Right. Any other points?
Moreover, they introduced this free concept to indulge a lot of customer. They first the first intention is to get a lot of customers in the initial years, and they may offer some discounts and all, which the existing partners wouldn't have done it. So
Perfect.
happens in all. Yeah.
Yes. Any other points? Please,
It's a
everyone
new
can speak.
innovation technology for the customer.
Right. Yes.
Initially, they started with the sharing option, so that was more beneficial for the customers. Going in the same direction, they can pool the cab.
Okay. Yes. Okay. Any other points?
Yeah, basically they started very small. Initially, it was not Ola actually. There was a different company called Taxi for Sure. They tested the market. So they, at that time, this much of, I mean, big funds were not required. So once the idea was clicked, then it lot of other investors came in, and Uber also came into India, and even Ola grew like that. So that is one of the biggest advantage strategy, to start small. That's how the private equity fund also works.
Perfect. Perfect. See, their main intention is to either to eradicate the existing business, that is to close down. Okay. There, I'll say my analysis on this part. Okay. When Ola and Uber 5 years back, I was started using 5 years back before, but the cost. Okay. We know if I want to travel from one place to the other, right? The cost was fixed. Okay, and the cost with the local vendor and this Ola or Uber, right? It is like margin was too much, too different. So if they're going to charge me 100, local vendor, they're going to charge me only 75, where I'm going to save 25. Their intention is to bring in low cost, so that everyone gets into that part first. And even if you refer someone, right, you are being paid some amount, the discounts and other stuff. That part is different. So first is they came into the market with a low price. They captured the market, and then now they are ruling the market. Correct me if I'm wrong. For example, Geo network. Have you ever analyzed that? Now Geo 3 months plan is more costlier than any other plans in other networks. Do you agree?
Yes. Yes. Yes.
This is the strategy. This is the strategy. When Geo came in, they were giving a 1 year free or whatever it is, 6 months free with a minimal recharge, everything. The discounts were more high. But now, if you compare with other networks, right, Geo is more costlier or comparatively costlier. I will not say more costlier. If someone is going to be a Geo or a person, please bear with me. I'm not against that company, okay? And I'm not against anyone here. So this is the strategy. They capture the market, and now we will feel that without Geo, no one is there. Now you can see even Vodafone gives you 2 GB data, but are we interested in Vodafone? No. Airtel, no. People who are there are still there, but they are trying to switch over because the network connectivity and the connectivity matters there. The connectivity is perfect for Geo networks, even for Ola, Uber. But there are a lot of challenges coming across in this network as well. Okay. So this strategy is that they want to capture the market with low cost. Initially, the profit of that organization or the company will be less, but in the future, they rule the market. This is the major strategy of any private organization altogether. If you have not thought in that angle, please go ahead and think it, right? Or any other way you have it, you can also explain it over here so everyone can understand that way as well. Any other points to here? The silence is killing me here. Sorry.
No, no, sir.
No, Kali, go ahead.
Okay, fine. Okay, next, the last point, higher fee structure, less riskier on the fund of fund. So what does this mean?
Because in fund of fund they need to pay more fees, which is like where fund of fund, the main fund also they will be charging fees, and also the fund of fund whatever we have as an investor where we have invested for that fund also we need to pay. So fees will be more.
Perfect. But it is a less riskier because it is going to be more diversified over there. I agree with you, Manjunath. Okay, management fee. Because for handling our funds, right, we need to pay management fee to our GP. That is nothing but your fund manager. Okay, so what is the normal percentage? Will be 2% of your commitment, or two. There are stages of calculating your management fee. Initially it will be 2% on your commitment. Later it will be your cost of investment on 2% on your cost of investment, and the rest will be the remaining commitment or something. The calculation goes that is purely on your LPA, which is specified over there. Okay. Any other clarification over there, or any points to add?
Based on the work handled, that percentage will be given. During the initial stage, the general partner's work will be more, so the more percentage will be given. During on going on time, the work of the general partner may decrease, and the percentage also may decrease.
No, the percentage is not going to be decreased. Sorry, Sai. Okay. Percentage is fixed. Okay, percentage is 2% is fixed. For example, okay, as far my understanding is there, I have seen the last couple of years, right? 2% is fixed. However, only thing which varies is either it is on your commitment, or is it on your paid in capital or invested capital, okay, or it's on your unfunded commitment. This will vary based on your fund life cycle. If your fund is very old, right, like 7 years or 8 years, the calculation will be on your remaining funded commitment. If it is going to be there on your initial stages, it will be on your commitment, because initially the fund manager has to do lot of research, as you told, lot of research, but the percentage is not going to change, because you need to do the same research till the end. But the investment of time or the research time which is going to involve is going to be comparatively less, because you need to cleanly watch the market. When the profit is at the maximum, you need to sell the shares to gain the profit. Correct?
Right.
So that is what is being taken into consideration over here. Any other points to add, guys, or any clarification on this?
One clarification. So in the initial terms, initial years, since the fund manager has to spend a lot of research and a lot of other stuff, the fees will be based on the total commitment. Later on, it will keep on the type will be changing, means unfunded commitment or funded commitment and so on, right?
Yes, right.
Yeah, thanks.
So the reason is very simple. Okay, when the fund is starting up, okay, the research time and other things will be more. You need to pay in for your research analyst and other things, right? So the cost will be more. If you are investing 10 million, right, your 2% of that will be paid to as a management fee for the year. Okay, even in mutual funds, there is a clause called management fee. When or ULIP, I have invested in ULIP, where if you are investing 60K a year, right, only 40 to 35 to 40K or 50K will go into this investment. The remaining 10K will go into your expenses. This is because to run their own business and to make that management analysis, that is a market analysis over there. And when you are going to invest on a regular basis, if you are going to invest on 7th year or 8th year, your management fee would have come down. The expenses part would have come down and your investment would increase. This is the logic in private equity as well. Okay. Any other clarification, guys? No. Okay. Next point, commitment. We have already discussed about the commitment. What is a funded commitment? What do you mean by fund total commitment, and what is an unfunded commitment? In private equity, that money that is committed by limited partnership to private equity fund is called committed capital. This amount is not requested initially from the investor. Like I told you, right? When there is a need for money, they will call, like company accounts, right? When there is a requirement of a cash, they will call for it. But can be drawn down on request by the general partner. There is a request to notice, you will get it. There is nothing but a capital call notice or a distribution notice. The capital call is for paying in and distribution while distributing to you. It is drawn down and invested over time as investments are identified. So they will not get your 100% of your commitment at one go and then research the market. When there is a request, they will get your money, get the money, and then they will invest. And you will get a 10 business days for you to pay the capital as well. Okay, are we clear? Cool.
Yes.
I assume we are clear. Yes. Okay. So next is capital call. That is nothing but your subscribe capital. Whenever there is a need, you need to pay your subscribe. And what is the distribution? The distribution is nothing but when we are selling the investment. Okay. Then that amount has to be paid back to the investor. Is it only when we are selling the investment? No. On a monthly basis or on a yearly basis, right? If I'm investing a lakh rupee in some investment, I expect something in return. Am I right? I doesn't want that money to be idle for a couple of years with the investor. So they will start paying you some interest income or some dividend, something in nature like that to you to make you feel that yes, what for the money I have invested, I'm getting some return in on a yearly basis. So that concept is also there. You can see like investment income will come, interest income may come to you as well in few points, in few funds as well, right? For the funds which I'm handling, which is into bank debts, majorly into bank debts, where I get my interest income on a quarterly basis or hourly basis or yearly basis, based on the contract with the particular investment. Okay, and you get return of capital, return on capital, nothing but your capital gains. Okay, and then your investment income, more than about that, like dividends or any interest. So these are the different clauses of capital distribution and different clauses of capital call. I didn't mention that. It can be for investment, it can be for fund expenses, or it can be for management fee. Okay, fund expenses includes your organizational expenses, setup fee, or any other expenses for that matter, for which the fund will get into. Any clarification here, guys? Till now.
Can you just brief down some more points related to capital distribute, the difference between capital distribution and profit distribution?
See, capital distribution and profit distribution are more or less the same. Okay, when we are liquidating an investment, okay, you will definitely sell your pot of shares and you will get some gain on that. Correct? If you have invested 100 rupees, if you are going to sell that 100 rupees share, the current market value is going to be 200. So 100 rupees is going to be your capital distribution. The remaining 100 is going to be your gain distribution, profit.
Okay.
Are you clear?
Yeah.
So capital distribution can be either way. For example, right, if there is going to be a stock split, or if they are going to give you some stock split or something, right, you are going to sell that part of share, okay, or bonus shares if you receive, for example. Okay, that is not an invested capital. Bonus shares comes with zero cost. If you are going to sell that bonus shares alone currently, that will be 100% your profit, and you will not get your return of capital over there. Do you agree, guys? Hello?
Yes, Kali.
Yes, yes.
I have one doubt.
So it is going to be in that way. Yes, sir, please.
Really, in the capital distribution, there will be callable distribution will be there, right, sir?
Sorry, which one?
Distribution part, distribution part.
Yes, yes, yes. What distribution you were telling? Sorry.
Callable means you can call that the distribution what you are made now.
You are saying return of unused capital, similar to that.
We have distributed some amount of profits and some capital back to the investors. And while distribution, we can give a notice, or we can say them that we can call back whenever the capital.
You are talking about the recallable distribution,
right?
Recallable distribution.
Right.
Okay, that is that clause. Yes, yes, yes.
And in that, profit also can be callable, or only capital contribution, capital distribution is only recallable.
It depends on the LPA. Okay, I'll tell you, when you are distributing something, as per my understanding on the LPA, which I have seen in my tenure, right, there is a clause in the capital in the LPA stating that any distribution which is made within 18 months of your investment, right, will be recallable. Okay, recallable is nothing but, guys, recallable is now your funded commitment is there, right, where your commitment is 100, okay, and you're invested 10, and that 10 rupees has been returned within 1 year to you. That is after selling of that organization. Either you got a profit, or that we are assuming that the company may not perform well in future. So we are making sure we don't get into the loss part. So we are trying to negotiate and bring back the cash back. So we are selling that 10 invested capital also back. So that will be added back to your remaining commitment. So your 90 unfunded commitment will be added back with 10 over there, so that your unfunded commitment remains 100. Are you getting it?
Right. Thank you.
Yes, everyone. So that is a recallable return of capital. So that is based on your LP. As per my, I have seen it, right? I have seen 18 months. 18 months is nothing but 1.5 years. In few months it is a few funds it is 12 months, and funds it is 24 months. Okay, it depends on the agreement which has been laid by the GP and the limited partner, that is the LP. Okay. So any other clarification on this, guys?
Hi, Kali. Kajal this side.
Yes, Kajal.
Can you please explain to the team why we do income distribution and a capital distribution? Why this segregation is required at all?
Yes, right. Sure. See, income distribution, as I already told, right? Income distribution on the funds which I have seen, it is on a quarterly basis, which I have seen, and it can be awfully also. The reason is very simple here. So if you are investing some capital, there will be some happening in your market value. The market value shares can go up and come down, and it will be fluctuating. So based on that, there will be a calculation which will be made for the income that returned to the investor. This can be on a quarterly, yearly, or hourly basis, to make sure this fund is a long term, private equity is a long term, and your return will be after 5 to 6 years. To make you comfortable for this limited period, like 5 years, right? There will be a small amount of distribution which will happen to you on a regular basis, stating that it is an interest income or an investment income to you. Okay, and your return of capital and your capital gains will flow after 5 years or plus. But there are some exceptional cases here as well, wherein, okay, when the investment is not going to perform well, or the investment is really exceptional and where you get a very good return during first year or second year, right? Then you will get your return of capital and capital gains during that 2 years or 3 years time only. Kajal, anything to add here?
I have just one point to add here. So maybe just to your point. The thing is, income distribution and capital distribution, the segregation is done mainly because of the tax purpose, which I have seen for the UK clients. So from a UK perspective, when those tax details are made, so there is a tax rate differentiation between income distribution and capital distribution. Income is charged at a 40% rate, whereas capital is charged at a 30% rate, or sometimes it can be 15% rate depending on the high net worth. So that is the reason that bifurcation is required for their tax purpose requirement in the year end.
Good learning for me. Thanks for that point, Kajal. Any clarification on that, guys?
Kali,
Yes.
if fund have a lot of income on a P&L side, but there is a no liquidity, then how it will distribute?
How it will?
There is a no liquidity, means no cash. Then how income distribution will be done?
See, until there is, that's what, right? Income distribution. The fund which I'm handling is currently into bank debts. I was telling, right? I get a quarterly interest or a monthly interest or awfully, as I told you, right? So interest will be paid on a regular interval to the fund. So obviously, I will be having a amount in hand with based on the return as interest, but I'm not going to liquidate my entire fund. I'm not sold out there. And this is a diversified investment, correct? So I would have invested in 100 portfolios or 50 portfolios. So when I get a minimum return from everyone, right? And there is a threshold numbers where if I'm going to reach 100K or 500K, I can distribute this money to my investors. For example, I'm getting 100 rupees today and there are 100 investors. So how can I distribute it? So they will have a threshold numbers over there. So the calculation happens at the back end where the GP will take a call. Okay, this is on the threshold where we can distribute. And they will also cross-verify their bank balance. That is your cash in hand. If the cash in hand and your interest income is not going to be the same, right? They take a loan to distribute, or they will say they will postpone the distribution. And it is not mandate to distribute that at any point of time. It is the call taken by the general partner or the fund manager here. You got it?
Okay, thank you, Kali. And in other way, so we
Yeah.
have this is close-ended funds. So after paying 100% capital to the LP and JP, and we still remaining lot of cash, then what we do with the fund?
So lot of cash is whether it has not been invested or it is a returned cash. I mean, cash which has come back from the investment.
Either way, we have huge balance in bank. So as per policy or as per regulatory rules, what we have to do?
Okay, we will distribute. I'll tell you the reason for it. Okay, if general partner is going to have a huge amount, for example, 2 million in his account, right? See, as per the limited partner is, as per limited partner, what they will think their as from their point of view here is, I have invested 100% of capital, and that 100% has been invested into the investment. So you will be under the assumption that has been invested and you get a return on that. If there is going to be any liquidation which has happened or any interest which has come to the GP, right? He will not hold a huge money in his account, because for the amount which is going to hold it, right, you need to pay them back some amount. Like, for example, you need to pay back their hurdle calculation. Hurdle number is there, where it is a preferred return, that is a minimum return which the GP has to go. That will come later on this fund. So if it is going to be on the higher side, right, if he's going to keep it idly, that is a burden for him while we are going to calculate the carried interest part. Okay, so what he will do is when he reaches the threshold number, he will distribute. Either it can be a returned capital, or it can be an interest income, or an investment income, or it can be a gain, or it can be an uninvested return, uninvested income, capital also, uninvested capital also. So what he will do is he will return that cash at once rather than keeping it in his account. So you will make sure what has been received from the investor or invested, and nothing. You will keep a small amount like petty cash or more than that to handle the expenses, day-to-day expenses of his organization, of the fund. Okay. Any clarification?
Okay, thank you, Kali.
Yeah. Okay. Any other clarification? Shall we move on to the next point? Yes, fine. Okay. Now comes your carried interest. Okay. What do you mean by carried interest? Anyone?
This is the profit.
It is a profit given to the partners over and above than regular management fees.
Over and above the regular management fee, profit given to them. Okay, fine.
It's
Okay.
called to
General.
be performance fees, which is collected by GP from LP.
Okay, performance fee. Yes, right. Yes, Vivek. Sorry, you were telling something.
That this is a profit given to the GP to the general partner, which is over and above the regular management fees.
Okay. Any other points, guys?
It is the return for the efforts of the general partners into the fund, and if the fund is done as expected, they should be, as per the agreement, they should be sharing some profits.
Perfect. Any other points?
In simple terms, sharing super profits to the manager, so that it's a motivation for him to earn more profits to the fund.
So fund manager, right?
GP entity, yeah.
Yeah, fund managers. Yes, correct. Exactly. Okay. Any other points?
It will be paid over the. It is a profit over the profit expected. It is expected. It is a profit. Sorry.
Sorry, go ahead. Go ahead. No worries.
It is a profit over and above the expected profit, which will be distributed between the general partner and the investors in the ratio of probably 20:88.
Correct. Correct. 80-20. Yeah, this can vary also. That's fine. The 80-20 is the normal split which I have seen across. Okay. Carried interest, correct. So most of the points you have covered me, made my work more easier. It is the portion of profit, okay, which has been given to the general partner. But what is the criteria for giving this profit? Whether you will get on all the profit, or is there a clause which need to be taken into consideration before we give this carried interest?
This is as per the agreement actually.
Okay.
The general partner should get their capital plus whatever fixed rate of return. All of this should be met, and yeah, it's mainly the hurdle rate. Once the hurdle rate is achieved and the partner's capital is returned and all, the profits will be there. And sometimes once the hurdle rate reaches also, it's not on the say if the fund is not liquidated also, they would be accruing this once the hurdle
Okay.
rate is reached.
Okay. You came up with the word hurdle rate. What do you mean by hurdle rate?
Minimum rate that should be minimum rate of return that the general partner should be getting from the fund after meeting all the expenses of the fund and all.
It is a general partner is expected or the limited partner here?
Sorry, limited partner, I mean to say. It's the
Limited
limited
partners.
partners.
Yeah, right. Okay. So your waterfall method and carried interest are similar to, I mean, are one and the same. Okay. So in waterfall method, carried interest is a plus. As everyone was stating, right? Waterfall method, how does the waterfall happens from top to bottom, right? So in this fund also, right? In this fund management also, there is a different criteria where the top of the waterfall is going to be your return of capital. So if I'm investing 100 rupees today, I should get that 100 rupees in return. And that is my return capital, correct? Hello?
Yes, correct.
Yes, yes. Thanks. Okay, so I should get that invested capital back to my account. 100 rupees I have invested, I got my return of capital. 100 rupees, yes, done. And there is a preferred return. Okay, preferred return is nothing but your hurdle rate or minimum return. See, when you are going to invest something in banks, for example, fixed deposit, right? You get a return of 5% or 5% minimum during this 10 years of time or whatever it is going to be. So the fund manager or the GP will also say that I will give you a minimum return of 8%. That is seen across. That can be even 5%, or it can be even 10%, 12%, depends on the agreement with the GP. You will make sure I will give you a certain percentage for sure. The guaranteed return. That is going to be your preferred return or your hurdle. So for example, if I'm investing 100 and the preferred return percentage is going to be 8, so I should get a 8 rupees minimum profit from that particular fund. This profit includes my income as well. Okay, yes, Manjunath.
Sorry,
Yeah,
Kali, by miss it is unmuted, I think.
okay, fine. So this is going to be a hurdle. So I should, when I get my 108 as my return, okay. And for example, for a direct calculation, I'm giving this 108 directly, guys. But your hurdle calculation is calculated on a daily basis on the interest rate and based on your paid in capital. So for example, if I'm paying 10 rupees, the hurdle calculation start from the day you have invested. Okay, and it will accumulate on a daily basis, and when there is an increase or decrease, your interest on this hurdle calculation will change. Okay, so that point we doesn't want to go in. When you come into the system, you will be able to see that. Okay, now let's go into the direct calculation, a simple calculation, compounding a simple interest calculation. So 100 rupees I have invested and 8 rupees is my hurdle. So when I reach 108, it is my minimum return I have agreed. The next pot is nothing but the next flow is nothing but your catch up. Catch up and carried will come into picture over there. Catch up is again right over and above your hurdle. If there is a profit of a certain amount, for example, 5%, for example, 113 rupees. In that 5%, GP will take 20 and LP will take 80. Or it can be either way also. It can be either 50-50 or 80-20 in the reverse way, anything like that. Okay, that is all purely on the LPA agreement. And then the last class is your carried interest. Carried interest is nothing but a GP is will get 20% and LP 80. Again, this clause is subject to change as per your LPA. Okay. So if I'm reaching a profit of 120, the fund is giving me a return of 120. Let's assume 100 is my return of capital, 8 is my hurdle. Then the remaining 5 GP and LP has a ratio of 50-50. Assume it 2.5 each. So GP will get 2.5, LP 2.5. So 113 rupees gone, remaining 7. In that 7 rupees, to 1.4 will go to GP and the remaining will go to LP. So GP initially you will invest only 1% of the total fund commitment. If the investment is going to be 100 overall, his contribution will be 1 rupee over in that. But the return what he is going to get in that fund is going to be more and above that. For example, you will get 2.5 in the catch-up stage and 1.4 in the carried stage. So you'll get around 3.9 or 4 rupees overall for the investment of 1 rupee. So you're getting 4 times of his investment. So any fund manager here is going to work hard for this carried interest calculation. Any clarification over here? This is on the waterfall and carried combined both. Any clarification here? Yes.
Kalimutu, it's a request. Can you just draw a sum with an example in Excel and can show the waterfall, please?
Sure. Why not? So 100 is my investment. Okay. Hope you can see my screen. Okay.
Yes, sir. You can.
The fund return is 120. Let's assume it in this way. My bad. So profit of 20 overall. Okay. Hurdle or your preferred is 8%. Let's assume 8%. 8% on your capital invested. To 8. So this plus this should be your total return. So my profit is remaining profit. Okay. 120 minus my. So 12 rupees is my remaining profit. In that I'm going to have a catch up of 5%. So in this 12, I'm going to calculate 5%, which is going to be 0.6. So 0.6 will be given to 80 to 20. So GP will get 12 paise and LP for that matter 48 paise, and the remaining is going to be again a 80-20 split. So this is your catch up. This is your carried interest. So GP for returning for investing 1 rupee, right? He got 2.4 as a return, and LP for that 99 overall, he is getting 9.6 as over and above the gain.
Sir, just want to confirm one thing. The ratio between the GP and LP isn't the inverse in catch-up bucket and carried interest bucket. As in the catch-up bucket, it is like the GP catch-up. So GP shouldn't be getting 80% and LP should be getting 20 and vice versa in the carried interest in the full promote bucket.
Yes, so that's what I was telling you initially as well, right? See, the reason is very simple over here. This ratio can be even 50-50 or 80-20 reversal. It depends on the LPA.
Okay.
Okay, so I've just taken it as a simple calculation. If you want to do it that way, we can do it. So 80%, that's what I was saying. The G catch up can be
It
either
is LPA
percentage
specific.
overall 64. Yeah, it is very specific, right? LPA specific. So since to make this calculation simple, I have just given it in this way. Even we
Okay.
can change that. That is not a big difference, right? So 20 and okay, I need to change this. It is going to be J15. Yes, this is the calculation as you told me.
So
Okay,
Kalimutu,
got it.
is
Okay,
LP
so
also
that it, yes,
get
yes.
action?
Varla Budi. நீங்க போங்க அம்மாட்ட போ. Sorry. Yes, guys, sorry.
Yeah.
Is high
Is
watermark
LP also?
concept
Sorry, your voice are little low, guys. Little louder, please.
Yeah.
is high watermark concept is also applicable in private equity? High watermark
Hey,
concept.
high watermark. Yes, there is a high watermark concept also. Okay, but I haven't come across any situation on the funds which we have handled till now. Okay, so if you want to explain on the high watermark, yes, we can discuss that as well.
So please explain the high watermark concept over here.
Anyone, guys, please. That was majorly into hedge fund side, as per my understanding. But now we have there is no segregation of hedge fund or private equity, but the investment is
Okay.
across all the funds now. So anyone
Okay.
can explain on the high watermark? Kajal, can you help me out?
Kali, I have also not worked on the high watermark at present in my funds, but I was going to tell you about on one thing that this what we have discussed is the European waterfall method. So just there is one more waterfall method that is
Yes,
American. So
yes.
it is just for an understanding for the team that this is not the only waterfall method that we follow across the our funds. So there can be American water method, there can be European. These are the two main ones which are being followed into private equity, but there again can be a difference according to the LPA. So
Okay.
that is what I was coming back to.
No, the difference on European and US method here is okay. For an European method, right? The until the fund gets liquidated, the GP will not be getting this return, the carried interest part. So whatever is 2.76, right? Whatever we have calculated here. Guys, I'm just going to mute also. I'm getting some disturbance. Sorry. Okay, thanks. Okay, for in a UK waterfall, right? This 2.75, whatever is going to be the GP part, right? It will not be given to the general partner until the fund is getting liquidated. The reason being, one investment can make a huge profit, other may be in loss. Okay, so this waterfall calculation will net off everything and the fund distribution will be after that, post that. Okay, they will net off your loss and gain across all the investment and the total will be taken for the calculation. Whereas in the US waterfall calculation, based on the investment wise, if one investment is making a huge profit, you will get this 2.75 which will be given to the GP. Okay, and if any investment is making a loss, there is a clause called clawback. Clawback is nothing but CLAWBACK. Okay, there is a clause called clawback where to cover the loss of the existing investment, if a GP has been given with carried interest, they can call back that money from the GP to compensate this loss. Okay, and the most preferred method for an LP limited partnership will be UK, and for GP will be US. Am I right? Because when the investment is getting
Yep.
liquidated, he gets some money. Okay, when he has to wait for 10 years or 15 years for the funds to get liquidated to get this return. So these are the two different concepts of difference of US and UK method of waterfall calculation here. Any clarification, guys?
One doubt about the catch-up.
Yes.
Whether catch-up will be calculated on the preferred interest or preferred return, or it will be calculated on the total profit, sir?
It will be after the preferred return, not on the total profit.
And that one more thing, sir, catch-up will be given to both us, sir. It will be given only to the general partner.
It will be
Yes, sir.
see, whenever there is a ratio, right, it will be an equal ratio, 80-20 or 50-50 or 60-40, whatever ratio it is going to be. It will be between your LP and your GP.
When I read it was it will be given on the preferred return, and that mostly 20% of preferred return will be given to the general partner. That will be the called as catch-up. I have it.
Okay.
Thank you for your
20% on the GP, right?
Right. Sir.
And the remaining has to go to whom?
Okay, sir. Thank you, sir.
And in that 100%, 20% will go to GP, correct? The remaining has to go to someone, right? That will go to the LP part. Yes, sorry, go ahead, sir.
So the 20% of preferred return is only given to the GP, and that's all. After that, that will be deducted from the remaining the 12 rupees, and that remain out of the 12 rupees, only 20% of the preferred return will be given to the GP, and the remaining amount will be divided between the GP and the LP in the ratio of 80:20. What I have read.
Okay. I see there is a different clauses here. Okay, so this catch up is a clause where your some amount, for example, here we had 0.6 here, right? So this is my catch up portion of numbers. Okay, which has to be segregated between LP and GP. Guys, correct me if I'm wrong, because on the catch up part, most of the funds doesn't have catch up. Okay, not all, only carried interest part is there, because which is an 80-20, which is a straightforward calculation. So in the catch up, if something is wrong in my side, please correct me as well. Okay, or if you want to give any inputs, please go ahead. So this has to, there is a clause of 0.6. So in that 80%, 0.48 has to go to GP. The remaining has to go to someone. Am I right or wrong? Guys, anyone side, please. Kajal, if you want to add here on the catch up.
Kali, as far as I am aware of it, the catch up goes to the GP. So the catch up goes to the GP, and when it comes to the hurdle, then with catch up is actually done to bring into 80-20, means at the end position when you are distributing the hurdle. So your full percentage of 80-20 should be there between the LP and the GP. To bring into that ratio, your catch up is coming into between.
Okay, fine. No, as far the fund which I'm handling, there was between GP and LP as well.
Yes, sir. What I am on
catch-up side is also based on the LPA.
Yeah, this again is fully based on the LPA. So it is the LPA agreement.
Yes, okay.
But it is the end result is, if we are coming into the end result to see the end result, that the fund has performed well, the fund is in a profit state. So whatever has been a distribution, if I divide 20% and 80%, 20% is the GP share and 80% is the LP share in totality till date distribution, has, if we take into consideration, it should be coming into that spirit. That is the aim of doing the catch up.
Yes, correct. That you should get 20% overall. That is the ultimate end result on the calculation part. Yes, I agree with that. So, Sai, this is on the LPA again, Sai, because the funds which I have seen is I have 25% catch up and 70% to the LP. Okay. So if you want, I can show that module also where the calculation is done. Okay, that is advanced carry and other stuff which is happening here.
Sir,
because
there is a clause again. Okay.
Yeah, Kali, he may be getting confused on the DBD. We have DBD carry also. We have percentage performance based carry also. So many things goes into carry and catch up. So that cannot be given as one go. It cannot be inclusive. There can be lots of things which needs to be taken into consideration to arrive at a carry to be the main goal.
Yes, I agree with that. Okay, so I hope you got clarification on that, right?
Actually, I don't have any practical exposure regarding this. I was the starting stage. I was an associate level. I read somewhere about these things. That's what I have read, and what you are saying. For I'm asking in that. I don't know
That's the
actually
reason.
what I'm.
No. It is not the matter of don't know, right? It is just for understanding because
Right, right.
now I learned many things from this group forum as well. Okay, which will be
Sure,
helpful for me to the next level here. Okay, so
Right,
everyone
right.
learns everything on a daily basis. I strongly agree on that part. Okay, so
That's what
this is
I was. What I
definitely
have
thanks.
read in this
Yes,
tool and
yes,
that's what
yes.
I. Thank you, sir.
I
Thank you
really
so
thank
much.
you, and that is really good stuff from your side. Okay.
Thank you,
Yes.
madam.
Yeah. Okay. So any clarification on this part, guys?
Yes, Kali, I just wanted to ask one question. The calculation that we just saw on the Excel, none of the calculations that we discussed took into account the unrealized losses that we have. So, are those not accounted for, or are those not reduced while calculating the carry?
No. That's what I was telling you, right? This is like overall investment. I have netted off all my losses, gains, everything, and the total fund distribution is taken into consideration. Okay. So if you want me to calculate on an investment wise basis, that will be a little challenging chart as on this calculation. This is a simple calculation which you have given. Okay. Either you can take it for the overall fund or for a particular investment. Okay. Where the investment is 100% liquidated and we are left with 120 as my return. That's it. Take that into consideration.
Okay, that is net of all these things.
Net of everything. My income distribution, whatever it is, I netted it off and I have taken this out. Okay. So if you want to take your losses, everything is net off here. So that answers the questions, right?
Yep.
Okay.
Thank you.
Yeah, that's fine. You're welcome. Any other points to discuss here, guys? Any clarification?
Kali, I have one question.
Yes, not. Go ahead.
Yeah. Here in Excel sheet, line number 9,
yes,
catch-up phase 5% is mentioned in on Excel sheet.
Yes.
Yeah, 5%. So how do we consider that 5%?
That is again okay. For few funds which I have seen, it is on the total profit that is out of 20. Okay, few is after your hurdle. So I have in this part I have taken after my hurdle 5% above my hurdle rate. I have taken. Sorry.
What I thought is what I observed that those percentage supposed to be that is for catch-up phase. 80% will go to the GP and 20% will go to the LP. So normally how I observed that calculate GP is supposed to get 20% performance fee. So GP's portion, whatever the 20% performance fee, suppose we have to consider 80% for catch-up phase. So in catch-up phase, only 20% plus whatever the LP's portion is 25% normally around that percentage. That percentage will be there. So GP will get the performance fee and whatever the remaining profit that will carry forward.
Yes, correct. See, as per the normal calculation, the catch-up calculation is brought into picture as you told me, right? GP should end up getting 2.4 on that is 20% on this 20 rupees. Okay, that is the ultimate aim of having a carried interest, 20% on the total profit. But the catch-up is brought into picture to make sure it gets the 20%. So you will get some partial amount over here and partial amount over here, which will be need to be adding to 2.4 overall. So if I put 20% over here, I'll reach to 2.4 on the carried portion. So which will be 20% of my overall gain. And this differs between fund to fund as well, Nagnath.
Yes, that is that I.
Okay.
No.
And
Can I add?
yes, Kajal, please.
See, for many people who are very, very new, I think they're getting little confused. So understand, maybe I'll speak in a very, very layman terms. As an investor, I have invested 100. I got my 100 back. I got 8 extra back. That 8 was distributed only to LP and nothing to GP. So GP has got 0 there. Now we have to bring it into 80-20 ratio between LP and GP. LP has already received 8. So that 8 level if I come 8 as an 80%, 20% GP has to get more. So in a catch-up phase, GP gets more, LP gets less. So that 80-20 ratio comes again back into split of 80-20. And post that, when we are doing carry, that is normal into 80-20 ratio. So that 8 extra what has gone to LP to meet that 8 mitigation to GP, that catch-up comes into the play to bring the split of 80-20 in that scenario. I think now it is clear. Maybe I'm able to explain. I'm not sure, Kali.
Yes. Yes.
Guys, let me see. This is a debatable and an in-depth. We need to understand this. Okay, so we will never have a solution on this calculation because, as for my, there was a fund which I was handling very recently. Last year it got launched. We took 6 months to finalize this calculation. Okay, so we had too many calculations to consider this and then bring it back in line. So this is like we will see it as a simple calculation. Okay, I understand. Sai, Nagnath is experienced on this. Yes. Okay, and there are, as Kajal told, there are some new joiners also. We will not have a deep dive into this as of now. Okay, this is the simple calculation. We will leave it there. Okay, and I'm open to discussion post this call. Anyone can reach out. We can have a discussion on this part. Are you guys fine with that?
Yes.
Let's go have a simple calculation. That's it. Okay, to make everyone understand. Perfect. Fine.
Yes.
Yes. Thank you. Thank you. Sorry, guys. Okay. And we are left with only this time now. Let's rush it up. Huh? Okay. Next point. Okay. So private equity versus hedge fund. So we already discussed about it. Closed-ended, open-ended. So in private equity, it's a closed-ended fund where your time limit is fixed. You will not be able to exit in between until you find a private investor who is ready to buy a fund. Long term and short term. Long term is private equity, short term is hedge fund. Illiquid and liquid assets. Since we are investing in venture capital or startup businesses, right? We will not be able to liquidate that fund at once. So that is the comparison between hedge fund and private equity. Complexity of investment, nature of investment, fixed life versus perpetual. So this all is clear here. Any clarification on this, guys? Hello. Okay. Any clarification? Until you speak, I will not be able to understand that, please.
No, Kali.
Okay, cool. Thanks. Okay. 4 voices from start of this meeting. I understand. I kept a note of people who haven't spoken. Okay, spoken here. Huh? Definitely, there is an assessment post this. Huh? Please be ready for that.
Answers will be given.
That is not assessment, Ravi sir.
Okay.
Answers will be given by individual people here. Huh? There is a separate way to monitor. Their questions will differ for everyone.
Okay.
We have kept 25 sets of questions already. Okay, and the strategy of private equity. Okay, as we discussed, it's a venture capital where we are investing in a startup businesses. Real estate investment, yes, we do. We are investing in, because this is a huge investment. We invest in real estate also. Sector specific. So I have seen for few funds, they are very much open on the sector specific, like they invest only in IT based business or armed that military armed way of business, anything in that way as well. And next is geography specific, like they invest in Arab countries or Middle East petroleum products, or they invest only in Asian countries. Now we can see a lot of investors who are coming into Asia region to invest more, especially in India. Okay, and buyouts is nothing but you know, guys, right? Buy the shares of an existing investment and send that liquid. I mean, what you do in buyout is like, sorry, you buy the shares of the organization, you become the maximum shareholder of it, bring it back from a public to a private company, delist in the market, and then continue your business. Okay, that is what is being done in buyouts. So it is like identifying an alien or undervalued company by a controlling stake, 51% or more than that. Take the company private if necessary. If it is a listed company, we take it as a private. Into company's prospect. So that's it. For example, if any company is not been performing well, which has a higher scope in the near future, they do this buyouts. Okay. And indirect investment is fund of fund, primary fund, and secondary fund, which we already discussed. Any clarification here, guys?
No, Kali, go ahead.
Okay, thank you, Ravish. Okay, the fund structures. Okay, why do we need to have fund structure in private equity? We would have like initially when we had the discussion, right? There were some points like we will not be able to invest in debt fund or we cannot diversify with any other areas, right? I think someone was telling me initially like debt funds or anything. So in this private equity also there is a fund structure. Okay, one is for tax benefit. Okay, if you are investing from Mauritius, Cayman Island, Guernsey, Delaware, okay, these are all tax haven. Okay, if you are investing via that to any countries, right? There are few countries have an agreement there. They doesn't want to have a double tax for them. For example, before Mauritius was a tax haven for us. So if anyone invests from Mauritius to India, right, they doesn't want to pay tax in India and to Mauritius for taking that money back. Now what is happening is there is no more Mauritius is a tax haven for us. So we need to pay tax in India and we need to pay tax in Mauritius also. To avoid this double tax concept, there is a structure which has been formed as tax part. Okay. Okay. And domicile of investors. For example, right, if he is going to be an Arab Middle East person, he cannot invest in US. There might be a restriction over there. Or if he's going to be an American person who wants to invest in China, that can be a restriction now. So to avoid this type of investment barriers between the investors, right? They set up a local office in that particular nation to bring that investor and invest in that. So for example, Pakistan can invest in China. So they will set up they will register a company in Pakistan so that a US can invest in Pakistan and that fund will be invested indirectly into China. So the return happens in this way. Okay, and domicile of investment, the same applies here. Middle East, most of the countries like now we can't invest in Palestine or any other areas, right? So we can route it with the different nations where that nation has a contract with that particular country to invest. So the fund structures will be formed in that way. There is no restriction or legal restriction which is going to be in place there. Okay. Next is your preferred treatment. For example, your family members or your friends or any other person, if they want to be treated in a special way, right, you can form a fund structure and you can give them some privileges like waiving of their management fee or expenses or whatever it is. Okay, and your regulations. So that are the reasons we have this different type of fund structures in place. Any clarification here, guys? Yes, no. Any points to add? Sorry. Hello.
It's fine.
Oh, yeah.
Yeah. Okay. Okay. Next is the fund structure. That is why fund structure and next is fund structure. One is master feeder. Anyone can explain me master feeder faster, please? I'll take 10 minutes more, please, guys. Sorry. Master feeder.
No idea, sir.
Okay, fine. I'll go ahead with that. Okay. Yes, Manjunath.
No, I was about to tell. Master funds will be going for the investment. Feeder funds will collect the money from the investors and feed it. That particular collected money, it will feed to the master.
Correct. Okay. So master and feeder, master can be set up anywhere in the world, but feeder will be set up in a region where the feeder will have these investors, okay, where they will collect the money and they will invest in master fund. So the feeder will invest only in master fund where the master fund will invest in a diversified way of investment. Okay, this is master fund and side by side fund is nothing but parallel funds, similar to a parallel funds. So if one fund is investing in one investment, this next fund also will invest in the same investment. It is like me and my friend going parallelly and investing the same organization. Okay, onshore and offshore. So this is for your investor specific. So one fund may be set up in US and the other fund can be set up in UK, and they both will invest in the same investment. So, but the entity will be set up as an onshore entity and an offshore entity. Okay, two different entity to avoid legal regulation, like US investors will be on the onshore and offshore will have the other foreign investors. Okay, and big investors. Okay, big investor is nothing but a person who is having multi-millionaire. Like we have one investment in Abu Dhabi, which is called as Abu Dhabi Investment Authority. As per and might be 10 years back, his private equity value was $100 billion. Only private equity share, which is 3% of his net wealth. Okay, so if he wants to start up or invest in any organization, right, we can set him up a separate fund because he can contribute a huge amount for his investment. Okay, next is parent company, like parent and subsidized company structure. Friends and family, like preferred treatment is what we discussed, right? That is your friends and family co-investment structure. This is parallel to your side-by-side structure only, where we can parallelly invest or co-invest or combinedly invest into that particular investment. Okay, that will be two different entity. One will be co-investment, other will be the normal fund. And opt out or side letter. Initially, when we spoke, right, few were telling in mutual funds we will not have the option of opting out, but in private equity we have an opt out option. Unless we need to have a side letter. For example, right, if someone doesn't want to invest in religious based investment, or someone doesn't want to invest in some armed vehicles or armed things, right? They doesn't want to invest. Some doesn't want to invest in gambling. So they can say that any investment related to gambling, I will not invest. You can opt me out. So that will opt the particular investor for that. When there is a return from that investment, that particular investor will not get any portion of that particular investment. Okay, so that is the opt out, but there is a side letter which has to be signed along with the LPA to the general partner for opting out from any particular investment or region. Okay, and investment structure, tax vehicle, domicile vehicle, and others. So this all is combined together. Any clarification, guys? Hello.
Kali, side letters will be given at the time of initial agreement itself, or any time of the venture.
See, most of the times it will be along with the initial time. Okay, if any deviation is going to happen from the LPA, like with the general partner, say for example, they will provide you the information where they are going to invest and the capital call notice. And if in that case, right, if you doesn't want to invest in that region, you can tell him. But most of the scenarios, okay, it can be 50-50 also. Mostly side letters will be along with your LPA.
Okay.
Because when the prospectus is released from the GP, he will say, I'm going to invest in this particular area and this is my strategy. If there is any deviation on the strategy, then in between the funds, the side letters can be brought into picture. But initially, when I doesn't want to invest in one forum of investment, right, or one sector, I can go with the side letter at the start itself.
Okay, fine. Okay.
Okay.
Yeah.
Any other clarification, guys? I know I'm taking your time. Okay, let's go into the next part. So limited partner is the investor we discussed. General partner is the fund manager, may or may not be a fund manager as well. LP GP ratio 99:1. Limited liability. LP is liable only for the committed numbers, not more than that. Why LP structure is preferred investment in US? So it is like limited liability is not agent of partnership. Okay, no duty and duty of care. So we get general partner gets unlimited liability because he is the person who is going to face all the consequence, not the limited partner. Okay. So any other clarification here? Guys?
No.
Cool. Thank you. Okay. What is the task of an administrator? We are almost one more slide to go. Okay, we take what is Apex do here is we do take care of the accounting, financial reporting, audit support. Investor reporting is done by TA team. Investor onboarding and management done by TA team, and also STP. They take care of this. Statutory filing, as of now, we are not doing it fully. We get the support from external party, transfer agency service, and cash management. So these are all services which a fund manager or fund administrator take care, and we as a fund administrator we do the same activity. Okay. So this picture states very clearly because fund admin has a close contact with fund manager as well as with the investors. But we don't have any tie-up with the investment. Fund manager declares where he is going to invest and other things, whereas we provide the notices or letters to the investor to bring in the money, that is the cash management for capital call. If there is a distribution, we give the notification to the investors. And the outsiders to this fund will be your auditors, regulator, corporate bonds, boards, banks, tax authorities, etc. Okay, these are the activities which we do. Okay, and Apex is doing end-to-end of activities in private equity, taking your onboarding, okay, and your investor onboarding, fund onboarding, then your accounting, admin activities, and then your cash management, and then investor relationship. So we are doing end-to-end of private equity in our organization. Okay, just for your information on this. Any other clarification on this, guys? Hopefully, yes, no, no. Okay, on the applications, okay, we are using 6 different applications for accounting purpose here. Okay, and I can bet on this. No other organization currently has all the 6 application in the current market. Okay, we are using Investron, Mantra, different Geneva, Yardi, Capital Tracker, and Taxes. Okay, Geneva and Mantra are interrelated. Okay, there is a pro and con on all these applications. Okay, but we take only the pro of it. So Investron is used in most of the funds where Singapore based and other areas. Okay, this is again a accounting platform for the private equity funds and also real estate. Even eFund supports the same. Geneva, yes, that is a major, that was majorly used for hedge funds earlier. Now they have brought in for private equity as well, which has been used majorly for hybrid structures of funds. Hybrid structures is nothing but a combination of both private equity and hedge fund. Okay, and ERD, Capital Tracker, and Taxes. Both all these are accounting areas, accounting platform where we do the accounting. Okay, and FIS DS is nothing but where we will have a contact with our investors. This is the portal where we upload all the capital call notices, financial statements, investor statements, or any investor related activities on this FIS DS. That is nothing, that has been taken care by SunGuard DX. Okay, I'm done with the training. Taken 10 minutes extra. Any questions? Thanks for your time. First of all, Mr. Man. Hello. Are you able to hear me?
Yes, Kali. Yeah.
Okay, fine, fine. Okay. So any other questions you can ask me now or later anytime. Okay. And please pass on your feedback to Ravi or any suggestions to me as well, which I'm open to take it up. Okay. For the development of my communication and training skills. Okay. Okay. If there is nothing, I am done with my training. Okay. So thanks for your time, guys.
Thank you.
Thank you.
Thank you. Thank you, Kali.
Thank you, Kalimutu.
Thank you.
Thank you.
Thank you.
Have a good day, guys. Stay safe.
Thanks, Kali.
Bye.
Thank you.
Thanks, Kali.
Thank you. Thanks, everyone. Yeah.
Thanks, Kali.